Hello everyone, this is Brad McMahon with Trader Trading Headquarters. You are watching our free educational video series for traders and investors. All we ask in return is that if you like the video, like it, and if you really like it, share it with a friend. Okay, let's take a look at the cup and handle pattern. Now the cup and handle pattern is really just a continuation pattern, and this is the classic trading pattern. It's also one of the most popular chart patterns that form in the markets, and it was defined by William O'Neill back in the late 80s. Now, more information can be found in his book, How to Make Money in Stocks, but we also teach the cup and handle pattern in our day and swing trading classes on tradertraininghq.com. So now this pattern typically has a run-up on the left side, and it's followed by a retracement back down that creates a cup-like bottom. Now this bottom dips about 15 to 35% from the peak. Now the bottom retracement should be at least 7 weeks long, and actually the longer it is, the better. Now the handle consolidates and it actually slants backwards about 10 to 15%. Now at this point, we have recognized that we have a cup and handle pattern, and we want to set ourselves up for an entry point. So what we do is when the handle is pulled back, we want to set our limit order at 11 cents above the peak here. Now this will ensure us that any false breakouts don't occur and we still get in at a good price. Now let's take a look at our UBI. And you can see we had a nice uptrend and we hit a peak. And sellers came back in and we retraced back down and we started forming this cup bottom. Now we formed a second peak here, and then we had a pullback where we consolidated all the way back to the 20-day moving average. Now what I did is I like to draw my lines where I have 2 or 3 touching points, and I set my stop limit order at 11 cents above the second peak here. And I got my entry price around $18.25. And I had as you can see, I had a nice little run up. We'll take a look here at TRU, and you can see at the first peak, we started retracing back, and we had a nice shallow forming cup-like bottom that retraced perfectly. And then we had a second peak, which was about even with the first one, and we started consolidating and formed our handle. Now it's important to note that the handle will fall back to the 20-day moving average and then run back up. And this is exactly why we want to set our stop limit order at 11 cents above the peak. And this way it doesn't pull us back in, and then we would have lost money as it pulled back to the 20-day moving average again. And what I really look for, and this is why I drew it in here, is I really look for some other type of pattern inside of the handle. And in this case, we formed another little cup and handle pattern. And this told me that this stock was probably ready to break out from its handle. So I set my stop limit order at 11 cents above. And as you can see, on this very day, we gapped up and we were into the stock. Had a nice little run up, and you can see below that probably the reason for that was that earnings the day before came out, and they came out favorable to the stock, and then we saw volume start to pour into that stock. So this was my indication that this was a good buy. I stayed in it, and we had a nice little swing trade for about a week and stopped out somewhere up here around the $31, $32 area. And we take a look at WB, and we formed a cup-like bottom. We had our nice little pullback. This was a quick one. We found support at the 20-day moving average, and I set my stop limit order at 11 cents above the peak. On this one, I actually bought in on the second day here, after seeing the huge volume start to pour into this stock. So I wasn't set up on the very first day here, but once I saw this volume really pour in, I was committed. I was in the second day here, and we had a nice run up and actually formed another handle up here, which is another stock chart pattern that we teach in a more advanced class. And here we have another pattern on CHFC, and we have a run up to a peak, a retracement back down, and then we had a nice little pullback on the handle. And this actually formed a channel, or what some people would consider a double bottom. We have a bottoming out here and here, and then the stock ran up and we broke through, and I set my limit order 11 cents above the price here, about 36.15, and we were in the stock. It actually pulled back and then it took off. So one of the reasons I put this chart up here was to show you that there are sometimes false breakouts. And in this area right here, this would be considered a false breakout. And some people may have entered the stock here and got suckered in, and then it pulled back and formed a bottoming out and then took off again. So sometimes that happens. It's okay. You can stay in the stock or you can get out. It's okay also to get out and then get back in when you see that it is starting to break out. And one of the biggest indicators that you want to use on a cup and handle pattern is this volume. So once you see all this volume start to pile in here, you know the big institutions are coming in and supporting this stock. So what happens is sometimes people will see all this volume coming in and they'll actually enter in somewhere up here, and then they'll get chopped up. So you want to be patient, and you want to let this stock consolidate and form its handle before you enter the stock. And that's very important. A lot of people will get tired of waiting that 30 days or 6 weeks of that handle being formed before it actually breaks out, and they'll either stop out at a loss or they'll get out and break even. So you want to let that money work for you in a favorable fashion by being patient and looking for the opportunities. And the opportunities come along when you set your stop limit orders up above these handles, and then you get into the stock. Okay, so let's recap of how the cup and handle base is formed. First of all, there's a prior uptrend of at least 30%. Then there's a retracement depth of about 15 to 30%. Then the retracement period, we want to let it develop, and it usually takes about 7 weeks. And remember, sometimes longer. That's actually better. We have a nice U-shaped pattern. The handle forms and pulls back about 10 to 15%. And then the buy point is 10 to 11 cents above the peak. And then the breakout will occur on some type of above average volume. So that's really key. You want to watch for that volume to start to come in, and you know that that's a buying opportunity. And that's how to trade the cup and handle pattern. Thanks for watching this video.
If you like this video and would like to learn more about stock charts and patterns, visit our website at tradertraininghq.com. Here you will find lots of information on trading the markets. Go to our training tab and you'll find free courses, articles, TradingView charts, watch lists, trade examples, books, and even a chat room. If you'd like to get a feel for our membership benefits, fill out this information here and create a password, and you'll get access to more free lessons. The free lessons include simpler stock trading for beginners, candlestick patterns, chart patterns, free introduction videos, webinars, and a trading community where you can access all of our social media links. Please take a moment to read our disclaimer. The information provided herein is our opinions only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss,
or any other result. These videos are for educational purposes only.